Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 17th of June. The information covered this evening is general advice only. As a reminder, you can subscribe to our Investor Club, which includes access to the advisory blog and a limited selection of our model portfolios. But importantly, you get access to the Monday night webinars. To take advantage of a free trial to the Investor Club, please visit the Investor Signals website, or if you'd like to discuss the service with me, call me in the office tomorrow on 1300 614 002. If you're really serious about your trading and investing, we start by ensuring that clients separate their portfolios. The disciplines around investing and trading are quite different. Throughout tonight's recording, I'll reference sort of the difference between a setup from an investor standpoint opposed to the shorter term momentum upswing that's required with trading, and we'll have a look at the tools in the software to assist with both of those approaches. But what we do offer is an upgrade to a platinum membership. It's $4,400 and it includes the mentoring across a variety of topics, but primarily just to get you set up correctly with the right principles, plans in place to separate your investing from your trading activities in the market. The services that Investor Signals provides incorporates research, brokerage accounts and managed funds as well. So again, if you'd like to know more about those, contact me on 1300 614 002. Moving straight into tonight's presentation, we look at the technology area of the US market. Momentum remains strong. We have the high-low formation, but we do have a red arrow present. We really wouldn't shift to a cautious view on the market until such time as the Nasdaq rolled over and traded below the 10-day average. So keep an eye on the blog, listen out for next Monday's webinar, and obviously we'll start to highlight that shift in momentum in the market when it does occur, but that trigger being of interest when the market closes below that 10-day average. On the S&P 500, we look at things from a few different perspectives. We're mindful that global GDP is slowing down. Generally, when that happens, so too will earnings growth. We've seen Europe move to lower interest rates already. We are seeing slower GDP growth in the US, in Japan, which will likely lead to at least a period of consolidation for equity markets. From a valuation standpoint, we look at the underlying earnings for the S&P 500, which is on track to deliver about $235, maybe even $240 of earnings on an annualized basis. So we look at for example, the upcoming June quarter. What does the earnings come in at? It'll likely be around $60 of earnings per share. You annualize that, you start to get up to that $240, which actually supports this valuation. So it's pretty hard to mount an argument that the market is expensive relative to where earnings are at the moment. So the question really is, does earnings growth slow? In which case, obviously leads to a consolidation in the market. A more aggressive stance on the downside would be really just to see if the S&P 500 trades below this 10-day moving average, at which point we would reverse these support lines to become resistance, and we'd be a bit more mindful of protecting portfolios on the downside. But that's not the pattern that's in place at the moment, at least in the leading markets, which is the Nasdaq and the S&P in the US. Domestically, we've seen a consolidation now for the most part of this year. About 6 months the market's mostly moved sideways, but domestically I have put the overhead resistance in place, and we're just watching the price action here below the moving average, which a big part of the weakness domestically is obviously the sell-off in commodities, and in particular iron ore from an index weighted standpoint, which is creating a slightly different picture there in our domestic market to what we're seeing in the US. Let's have a look at what's gone on the advisory blog over the last few days. moving through these, so Tabcorp, bullish on Tabcorp. We were tracking this on the way down, waiting for the price action to reverse back above the moving average. We've had that on Friday with a really strong close and expecting momentum to continue to move higher there. So it's simply a breakout trade. We're trading the reversal there, the breakout day there on Friday. So you want to be long Tabcorp with a stop loss below that pivot low there. The food ETF, I look at this more from an investor portfolio allocation than at this point a trading opportunity, but you could certainly start to have a think about adding a small amount of this into a longer term investor portfolio. The cloud computing ETF still attractive. I think that's a theme that you could pursue from a medium to long term investment perspective. If you're looking for sort of shorter term trading opportunities, I'd probably steer you more towards US individual stocks, but domestically, if you were just simply wanting to add global exposure through buying ASX listed instruments, this cloud ETF is one way to do it, and I think sort of down here around this sort of $11 to $11.50 is a buying opportunity. Mineral resources, iron ore is obviously an important aspect of the portfolio here. We're seeing iron ore names sell off. I wouldn't rush in just yet. I think apply some discipline, wait for the price action to get above the 10-day average. We'll take a closer look at some of these names as we go through tonight's presentation. Food ETF cloud. Future payments of ETFs, so this picks up a number of leading global payment companies. The correction here from 12.50 down to 10.50 is a buying opportunity. Essentially, the view is that the higher low formation around this $10 to sort of 10.75 range is the buying zone that you want to start entering that again for a longer term investment portfolio. Kogan, a little more speculative here, but ultimately we see this as a category kind of winner in the Australian market. May ultimately get bought up by another company looking to bulk up their e-commerce strategy, but you do need to run a stop loss on Kogan, so the stop loss needs to go below that pivot low there. The early postings around Tabcorp, which will cover that. Ramsay Healthcare, continue to like this. The price setup here is encouraging. So for investor portfolios, if you don't own it, I recommend adding it. Traders, you might just want to wait for a little more upside momentum and then run a stop loss below the pivot low, and we'll take a closer look at that one tonight. Moving back through the blog, so looking at the US stocks, Intel, for those that have been following the recordings over previous weeks, I've been bullish on this. It's one of the value plays that I see potentially with sort of more than 100% upside over the next 12 or 18 months. So being a buyer of Intel on the dip makes a lot of sense. There's a fair bit of research there on the blog around my view on that. Domestically, Ansell, so bullish on that. Cybersecurity is one of our major growth themes. Cloud, cybersecurity, semiconductors, but the cybersecurity area has pulled back and there's some value there. The future of payments. Domestically, Ingham's Group, certainly have a think about that for an investor portfolio. I don't think there's a lot of trading momentum there right at the moment. The artificial intelligence ETF, so this was one that just flagged a new ETF that's listed on the ASX, and it's had a nice little rally there from around $10 up towards $10.75, $11. The small companies masters ETFs is a Van Eck product. Just highlighting really again for investors the switch here from sell conditions into algorithm buy and the higher low formation. Northern Star, so under algorithm buy. The oil ETF, been bullish on oil and comfortable being a buyer of really Santos predominantly on this sell-off, maybe even Woodside Petroleum, or if you're just looking for the oil ETF, the triple O is one way to get exposure to that. Alibaba, again on the international side, have a look at that if you're looking for individual stock exposure into China. Pilbara Minerals, so under algorithm buy signals, have a closer look at that as we move through. Treasury Wines, I like that on the switch from sell conditions there into algorithm buy. block. We'll have a closer look at the chart there on this one. This is one that you could certainly track from a trading standpoint. I think the volatility in this name is sufficient for it to be on your radar from a trading opportunity, but you just want to wait for the price action to move above the moving average and then again put the stop loss below the pivot low. So I'll have a closer look at that one tonight. The cybersecurity ETF, this one here, the China new economy. So again, switch from sell conditions there into algorithm buy. So comfortable being a buyer of that on the higher low formation. Moving back through Dexus, not doing too much there at the moment. The Global Health Leaders ETF, again for sort of really a low volatility opportunity for your investor portfolio. Switch from sell conditions there into algorithm buy. And there we are, back to last week's webinar. Alright, or that was a week before, given the public holiday. Okay, so with tonight, what I would like to do is jump into the stocks that have gone on the advisory blog for the last 30 days. We'll have a quick focus on these and identify where the opportunities are. Pepper Money, fundamentally, I don't mind the recovery story here. They're likely to keep winning business. So I'm going to take a view here that the pivot low is in place. You want to look at considering this as a trading opportunity with a stop loss below $1.40 there. ASX under algorithm buy conditions, really for investor portfolios, just highlighting the switch from sell conditions into algorithm buy, looking for it to find support. And we know that the upside on the earnings growth is pretty slim at the moment, and yeah, they're struggling with obviously slightly higher cost pressure. So it's not one that we're saying is going to rally tomorrow, but from a value perspective, it's starting to look better. The yield with a fully franked dividend, it's just one to think about for the investor portfolio. For traders, we'd come back and look at it at another time. Ingham's, again, good opportunity from an investor standpoint. Switch from sell conditions there into algorithm buy. We expect the lower around 320 there to hold. The dividend's attractive. There's room for that in the investor portfolio. Tabcorp, this is a little bit more from a trading standpoint. It's really been driven by the momentum breakout just here. So we had a really strong day on Friday. So you want to be on board this trading opportunity, and we're shifting the stop loss from the pivot low there up to the higher low formation there, or the first test, first fail. So specifically the stop loss comes up to 59.5 cents. And we're looking for the momentum to continue to carry higher there. The CNU China ETF, so again, like this from an investor portfolio, switch from sell conditions there into algorithm buy, and comfortable that the underlying instruments here are appealing enough to where you'd want to think about adding that into your portfolio. Ansell, switch from sell conditions here into algorithm buy. It's holding that pivot low there at $24 and starting to build higher low formations, and we see value in Ansell there. Ramsay Healthcare, really kind of highlight this as a bit of a unique opportunity and draw investors' attention to this one. From a trading standpoint, you could certainly own it with a stop loss below $47.83. For an investor, what you're really looking at is the corrections occur. They've sold off obviously part of the Malaysian hospital assets, reducing debt. The valuation's looking a little better now. What we're looking for is an inflection point here and the beginning of a new uptrend to evolve. So for an investor, you can simply just accumulate the stock. For a trader, you're going to take more notice of the higher low formations here and specifically run your stop loss under that $47.83 block. This is again a trading opportunity once the momentum starts to move higher. So whilst the price action is below the moving average, we're not doing anything here from a trading portfolio perspective. But as soon as that starts to move above that average, I'll draw your attention to it on the advisory blog, and you might want to have a think about placing a trade there with a stop loss below the pivot low. So keep an eye on the blog regarding that one. The cloud ETF, bullish on this, so switch from sell conditions there into algorithm buy. This is the value zone where we're looking to accumulate the position. We already hold it in our managed fund and portfolios, and we'll comfortably add to it on lower levels, but within this range here, we think that that offers good value there. The oil ETF, bullish on oil, higher low there at around $5.50. And expect ultimately that to build and trade higher. The global cybersecurity, we like that from a sector allocation. Dexus not doing there at the moment. Northern Star, just let this sort of move possibly a little bit lower, but ultimately what you're looking for here is a reversal in momentum and a close above that moving average. And again, that'll be one that I'll draw your attention to on the blog for shorter term traders. But right at the moment, whilst the momentum is negative and it's below the moving average, we're not doing too much there on the trade side. The small companies ETF switch from sell conditions there into algorithm buy, so we're comfortable with owning a small amount of that in longer term investor portfolios. The bug ETF, which is the global cybersecurity, corrected from 1250 down to 1080, so you want to be a buyer of that at or near this sort of $10.50 to $11 range. The health ETF switch from sell conditions there into algorithm buy. It's finished its sideways consolidation, made a higher high, and you want to be comfortable buying that on that higher low at around 1070 or 1050 to 1070. Again, that's a position for an investor portfolio there. The iPays, this starts to get a little bit more volatility. So again, if you're looking for this from a trading standpoint, just wait for it to trade above that moving average and then look at it with a stop loss below the pivot low. From an investor portfolio, the switch from sell conditions there into algorithm buy, you want to be comfortable accumulating this around this 10 to 1050 range, and I'll continue to update you on the blog regarding that one. Treasury wines, switch from sell conditions there into algorithm buy, the higher low there at around $11 approximately, so we like treasury wines. The food ETF, so this is one that I mentioned earlier, so the switch from sell conditions there into algorithm buy. So again, not necessarily too aggressive from a trading standpoint, so I'm really commenting on this just for an investment portfolio where you'd allocate a small part of your portfolio to it, and what's driving that is the switch from sell conditions into algorithm buy. Kogan, so this is one where you would want to run a stop loss on it, really a break below the pivot low, so to put specific numbers on that, Kogan with a stop loss at $4.25 from a trading standpoint. Horizon, certainly keep an eye on this, it's moving below the moving average, looks like it's going to take out that low there. But the next stop would be down here at somewhere around the $3.50 level. Ultimately, we'll get down to a level where we'll find an inflection point, and again, sort of a move back above this moving average becomes your entry condition there. Santos below the moving average, but again, we kind of watch this as it trades maybe a little bit lower, and in the days we'll wait for it to cross above the moving average. All these ones where I'm saying we'll wait till it crosses above the moving average, I'll draw your attention to that on the blog when it occurs. The sell-off in the iron ore names, again, be patient, just let this sort of move possibly a little bit lower. It's not until that price action reverses and gets above that moving average that we're going to get aggressive on these opportunities. Same here with Pilbara, just let it move a little bit lower, wait for the price action to get above the moving average. The artificial intelligence ETF, as I mentioned earlier, rallied from around $10 up to $10.50. Data 3, we're taking profit on this, so this is one that we were bullish on going back a few weeks ago. We've now closed that position out, and there we are back to Pepper Money. So that's a review of what's gone on the blog in the last 30 days. So just as a reminder, our model portfolio is for investing, looking at the market from months and years. If we have a look at an example of the portfolio, the ASX 100, you can have a look at recent positions that have been added, stuff that's been in there a lot longer. You can see big percentage gains around the capturing that bullish momentum in these top 100 stocks. What I would like to do this evening is I would suggest that if you haven't already, you set up a free trial and log in and have a closer look at these investor positions. Tonight what I'd like to do is share with you the trade table, which is new technology that we have which helps to automate the entry opportunities into trades where you're buying it with a holding period of 7 to maybe 45 days. So we go to trade table, we go to the drop down, select ASX 200, get the least number of days to the top. So these ones here where they've got 0 means they were added tonight at the close of market, and you can see you have the buy price, the buy date, the buy price, and over on the right here is the stop loss. So if we have a look at Capricorn Metals, what the algorithm's picking up here is it's under primary buy conditions, the green arrow, and we've now got to close above the moving average, and the stop loss goes below that pivot low there. So the stop loss is at $4.37. If we go back to the trade table, you can see that's exactly where it is, $4.37. So let's just toggle through these positions. Again, this is short-term trading. Most of these, the algorithms only going to hold for somewhere between 7 to 45 days. It has tight stop losses in place to protect the portfolio. So let's just go through and have a look at these names and some of the patterns that are in place. So Sigma, again, algorithm buy signal, green arrow moving above the moving average. The stop loss goes below that pivot low at $1.07. Life 360, momentum moving higher, the stop loss goes below $13.22. SiteMinder, under algorithm buy signal, green arrow moving higher, stop loss goes below $4.62. Ansel, so buy condition, green arrow, the momentum starting to build. So what's going to happen here is the algorithm, should this rally continue, the algorithm will stick with it, and not for any predefined period of time, but as long as the momentum remains positive, it'll capture the bulk of that up move, and then when it rolls over, we'll see that closed out. So the algorithm's programmed to look for the momentum over that short duration, which is obviously what you're looking to do when you're trading the market. Brickworks, algorithm buy signal, green arrow. Again, the algorithm will stick with this as long as the momentum builds. Harvey Norman, so under buy conditions, the momentum's faltering a little, but you've got some bandwidth here where it's not going to get you out of the market too soon, but if that momentum was to really roll over and falter, then the algorithm's going to close that out, and there we are back to Capricorn. So if we have a look at what's in the portfolio at the moment, most of these have been in for a short period of time. If we go down and have a look, the positions are mostly in profit, albeit not by a big percentage gain at the moment. If we go down and have a look at sort of some of the bigger gains, 17%, 12%, with the momentum in the market faltering like we looked at where the XJO is rolling over, we've had quite a few positions closed out just over the last day or two. If we go down a little bit further, let's have a look at a summary of the performance. So we've seen the peak of the performance in the top 200 portfolio up 46% over the last 18 months or so, and we're now starting to see that come off a little, but we haven't given back too much of that, so about 7% from peak to trough at the moment, and we have the comfort of knowing that if the momentum in the market did falter, we have the stop losses in place. So that's the trade table. If you're joining as part of your 14-day free trial, which to take advantage of that, simply go to the Investor Signals homepage. If you've had a trial previously and you just want to reactivate an existing one, that's fine. The prompts there, follow those. If you have any technical issues and you just simply need to have a chat with me and I can help set things up, give me a call in the office tomorrow. But over the next 14 days while you're on the free trial, I encourage you to follow the advisory blog closely, take notice of what trades we're taking, incorporate it with the commentary that's provided this evening, and obviously keep an eye on the investor portfolio as well as the trade table to see what the algorithm's adding and removing at any point in time. Thank you for listening in, and I look forward to speaking again next week.